This week's economic updates reveal a tricky puzzle for central banks and energy markets. The US inflation report surprised to the upside, putting the Federal Reserve in a policy trap. The European Central Bank paused rate cuts, signaling caution. And OPEC Plus announced an output hike that could shift oil prices. Let's break it all down. On 11th of September, US data showed consumer prices rising 0.4% in August. Year-over-year inflation ticked up to 2.9% from 2.7% in July. Core inflation, which strips out food and energy, rose 0.3% month-over-month and 3.1% year-over-year. That means underlying price pressures remain stubborn. At the same time, the labor market is weakening. Jobless claims jumped to 263,000, the highest since 2021. So the Fed is caught. Inflation is too hot to ignore, but the labor market is too soft to keep tight. Markets expect at least a 25 basis point rate cut at the September 17th meeting, with some even betting to 50. This is the classic policy trap. Cut too much and you fuel inflation. Stay too tight and you risk a deeper slowdown. Over in Europe, the ECB left its main refinancing rate at 2.15%. After months of gradual easing, policymakers hit pause. Why? Inflation is easing but still sticky, and growth is showing signs of resilience. The ECB now expects Eurozone GDP to expand by 1.2% in 2025, better than earlier projections. Headline inflation is forecast to stay near target, 2.1% in 2025, then easing below 2% in 2026. Christine Lagarde called the euro area in a good place, pointing to solid labor markets and domestic demand. But risks remain. US tariffs, French fiscal instability, and global trade tensions could all shift the picture. For now, Europe is in wait-and-see mode. Finally, energy markets. On September 7th, OPEC Plus announced it will raise oil production by 137,000 barrels per day starting in October. This is part of a slow unwinding of the 1.65 million BPD in cuts from 2023-24. The group is trying to defend market share while keeping prices stable. Brent and WTI rose modestly after the news, but analysts warn the extra supply could pressure prices if demand softens this winter. Saudi Arabia is pushing to protect market share, while countries like Iraq and Russia are being asked to compensate for past overproduction. It's a delicate balance. Too much supply and prices sink. Too little and competitors fill the gap. So here's the big picture. In the US, the Fed is stuck between rising inflation and a cooling job market. In Europe, the ECB is pressing pause, betting the economy can handle steady rates. And in energy, OPEC Plus is trying to walk a tightrope between market stability and competition. It's a global balancing act, and for investors, businesses, and households, it means more volatility ahead. Thanks for watching, and don't forget to subscribe for weekly updates on global markets and the energy transition.